The market in Kelowna has been slower than what we've expected. The stats are out, so let's talk about what is happening in the Kelowna and Okanagan market. My name is Stephanie Lafergie. I am a realtor and mortgage broker here in the Okanagan, and I always want to provide you with value and great content. So if you love talking about real estate, coffee culture, dog parks, family stuff, then you'll want to like and subscribe to this video so that you can follow along for more. The Bank of Canada has chosen to hold interest rates for a little bit longer. They don't want to start making rate cuts just yet. They want to see how the previous rate hikes are going to still affect the market. Usually, we need about 9 months to actually really see the effects of all the rate cuts that have happened. So what is the Bank of Canada saying? So if we look over here, the Governing Council wants to see further and sustained easing of core inflation. And they want to continue to focus on the balance between demand and supply in the economy. And I actually agree with them on this. I think if we cut rates too quickly, we'll start to see an increase in demand and housing prices are going to start going up rapidly because everyone is just waiting in suspense to see if interest rates will be cut. So how does this affect real estate? Buyers are waiting for interest rates to come down, but sellers are also waiting because they feel that buyers aren't active in the market yet and they're wanting to wait. Let's look at the market on a national level and see what's going on. So according to CREA, who basically takes all of the statistics and looks at it on a national level, housing is actually looking better than it was. It was a very weak second half of 2023. Home sales over the last 2 months are actually starting to show a sign of recovery, which is great. And home sale activity recorded over the Canadian MLS systems rose between 3.7% between December and January, building on the 7.9% month-over-month increase recorded the month prior. Now, this fact is interesting. While activity is now back on par with 2023's relatively stronger months over the spring and summer, it actually begins 2024 about 9% below the 10-year average. Very interesting. And now let's actually look at Kelowna, or I should say the Central Okanagan specifically, and see if this actually rings true in our city. This is the overall residential sales, and we're just going to look at the Central Okanagan for simplicity's sake right now, but we are going to touch on some of the other areas in the Okanagan because I think they are. When we look at Central Okanagan, which is essentially from Lake Country to the Lower Mission, we're at a decrease in sales. We have more listings than we did last year, 30% more actually. And what I find really interesting is the shoe swaps. The shoe swaps grew in about 31% in terms of units sold, 68.5% in terms of dollar volume, and they have 43% more active listings. Now, although this is high percentage in terms of actual unit number, it's not a lot. There was 6 or 7 sales attribute to this kind of an increase because usually they don't get that much activity. So that's why it's so inflated. So that's important to know as well. But you'll see that as we go through some of the other stats. So let's look at single family homes to start. Single family homes are actually quite a bit down in the Central Okanagan. They are down by 15.2% compared to last year, whereas sales in Vernon are up. Like I said, they're way up in the shoe swaps, and they're also up in the South Okanagan. So to me, it looks like there's actually more activity in those smaller communities. People are buying outside of the city. The benchmark price, interestingly enough, despite the decrease in activity, has actually gone up for the Central Okanagan. Housing prices, as I always tell people, it often appreciates. You can build equity in your home no matter what. So the price of homes are up across the board, except for the South Okanagan. They have actually gone down, interestingly enough. Now, days to sell, it's about 77 in the Central Okanagan, 102 in the North Okanagan, similar in the Shuswaps, and 73 in the South Okanagan. We've got lots of inventory. And again, let's take a brief look at townhomes. We saw an increase in the central Okanagan. So people are buying more townhomes than they are single family homes, which makes sense because they are more affordable. And townhomes are down in the North Okanagan, but they are way up in the Shuswaps. And like I said, that attributed to only 7 sales, but that equals about 600% when you're talking about townhomes. And in the South Okanagan, they're also up. And across the board, the benchmark prices for townhomes has actually decreased, interestingly enough. For condos, prices went up in the Central Okanagan, the North Okanagan, and the Shuswaps. Sales were down in the condos in the Central Okanagan, but they were up in the Vernon area, North Okanagan. They decreased in the Shuswaps and they decreased in the South Okanagan. This is just a glimpse into the market, but interestingly enough, it actually does fit in with the national statistics. When you just look at Central Okanagan, sales are about 10% down compared to last year. However, prices are still going up. At least for single family, that wasn't the case this month for townhomes and condos in certain areas. So it's interesting to see where the market is seeing the most activity. And this month, that's the Shuswaps. The Shuswaps have seen probably the most activity compared to last year. Obviously not in volume. They don't have enough inventory to move it when you compare it to Kelowna. So that's why we see those inflated numbers. But it is interesting to see that everywhere across the board, so nationally and on a local level, it's a bit slow. And I was expecting it at this time of year to actually be moving a bit quicker. But I think people are just waiting for those interest rates to come down. In terms of whether we're in a buyer's market, a seller's market, or a balanced market, I would say depending on what we're looking at, whether it's condos, townhomes, the area, it's hard to give a generalization to it. We're in that balanced market, leaning more towards a buyer's market where the active listings that are staying on the market a little bit longer. And in terms of inventory, there's definitely enough inventory to last longer than the average days on listing, which hints towards more of a buyer's market. However, when we're looking at townhomes, it's more balanced. And I do believe they're going to be making rate cuts later in the year. We'll definitely start seeing more activity, which will balance the market back to where it should be, making it less of a buyer's market. Thank you so much for tuning in to this market update. If you like this video, I think you'll really like the recent video I did on the cost of living in Kelowna in 2024. Please don't forget to like and subscribe this channel, and I will see you guys next time. My name is Stephanie Lafergie. I'm with the Move Okanagan Real Estate Group, and I'm so appreciative of you.